everyone. In this video, we're going to work on Jane Johnson return. And this is all about the Schedule C business that she has. Okay, so she has a lawn care business. So business miles, so gross receipts for 200,000 and then expenses. The tricky part here is about the van, the auto that she has. So for auto expense, the taxpayer has a choice of using either standard mileage rate, which is just the total business miles driven times the mileage rate. So the record keeping is much simpler for taking this type of deduction, using this method, just have a mileage log. But if the actual expense is higher, then it would be more beneficial for the taxpayer to use actual. So the way actual works is that you still calculate what the business use is, and then you apply to all the actual expense and taking the deduction on the business use only, this business use percentage only. So in this case, the actual expense will be the van, which cost is 25,000 times 77% business use. This is how it's calculated. And so for the van itself, it's 19,285. And then the expense right here is the this is the expense for the van, which is the things like repairs and fuel, and we will take the business percentage as well. So for business use, the deduction is 1540. So if you compute you add these two together, it's higher than the standard. So it's more beneficial for Jane to take an actual deduction. And I'm going to show you how to input that on the return. Okay, so we determined that. And then she also purchased a computer in 2019. And then a couple of other assets that we need to input in the system as well that was acquired back in 2015. All right, so here we go. We will log into TaxSlayer. I already inputted the basic information. She's just filing single. So we are in income here. We're gonna go to from income, we're gonna go to profit or loss from business, which is a Schedule C. And we will first input the business information. She didn't have a business name, so, but then we do need to input the business type. You can either click here and look through down here what the code is, which is pretty comprehensive, or you could simply just Google. If you Google business code for lawn landscaping services, it's 561730. So we're going to go here and go back here and then and come back here. All right, so let's go back here again. And then we're going to input 561730. And that will give you landscaping. It's important that you pick the correct code because IRS uses data to to kind of calculate what the industry standard, the profit margin should be. So we'll click continue. And then let's input income. She had income of 200,000. So 200,000. And then click continue. And then let's enter some general expenses that she had. So she had wages of 20,000. And then taxes, payroll taxes of 1,500. And supplies of 1,000. And phone. So if you look through here, there's really no phone specifically. I would recommend we input that in other expenses where we can specify what type of expense it is, so it's easier to find. So we have rent of 2,000. If it's a lease of equipment, then you would put right here, but this is regular rent. And then insurance of 900. So we go up here, we find there is insurance right here, 900. And then we want to input the van expense of 2,000 and taking only the business use. Okay, so let's continue out of here first. And then we're gonna go to, we're not gonna use car and truck expense. This is where you input the, if you're gonna use the mileage, the standard mileage, you input the mileage and then the system calculates what the, based on the standard mileage rate. So we're gonna go to other expenses here. And then, so the first one is phone, which is 800. And then we're going to add another one, which is van expense. And then here we're going to use the 2,000 and multiply by 77%, which is the business use. So just to remind you, right here, we use the 2,000 times 77% equals 1,540. Okay, so this is 1,540 right here. And then we'll continue out of there. All right, so now we're going to focus on the final part of Schedule C, which is the depreciation. So we wrote down here, depreciation. So the first one is the van. Okay, so we're gonna input the van 1/1/2019. Cost is 25,000. And percentage of use, business use, 77%. And you have to calculate the 179 deduction yourself. So this calculation, again, it's the cost, 25,000 times 77%, and that gives you the 19,285. Okay, so we're going to input that, and then you need to select the depreciation method. So an auto is a 5-year property. So we're going to select 5 years and then click continue. All right, so we also need to add another asset. So there are 3 more, right? So she purchased a computer during the year, date of service is 1/1/2019. The cost was 2,200, and we're gonna assume that's 100% because it didn't say that she used partially. Assume that 100% business use, and she wants to take the entire amount as the 179 deduction. And then a computer is a 5-year property as well, right? So we're gonna click out of here. Actually, we need to add the printer and the lawnmower as well. So the printer date in service was 3/1/2015. The cost was 900. And we're going to assume that it was 100% business use. The printer is also a 5-year property. So for properties that's acquired prior to this tax year, you have to input the accumulated depreciation, meaning that from the year, for instance, this one was purchased in 2015. So in the year 2015, 16, 17, 18, depreciation would have been taken already. So we need to tell the computer how much has been accumulated. So you will have to calculate that. Some tax software, if you input the date, it will calculate for you. But for TaxSlayer, it doesn't have that function. So to calculate the, share this. Here's a quick share. So for the printer, it's a 5-year property. So 744.48. So 744.48. Useful life is 5 years. Right, so we're gonna continue out of here. That's the printer. Okay, so apparently the system doesn't take decimals, so we're gonna take that out in 744. All right, and I'm gonna add the lawnmower. And it was 3/1/2015. Cost was 2,000. And then the percentage of use, we're going to assume it's 100%. And then this is the same thing. We need to, well, depreciation method is 7 years. And then accumulated depreciation for the lawnmower, 7 years, it's calculated 1375. Okay, so it's 1375. And then we'll continue. So there you go. We have the 4. So everything's inputted. Let's review the return. View and print. Okay, so in the next video, we will review this return.